here, we were talking about an idea last week of when we get the breakout of consolidation, I really want to see a breakout pullback in order for me to take with breakout entries. Otherwise, I don't believe it. I don't think it's real.
Yeah, I was about to say I don't really like breakouts of consolidations.
Yeah, because
especially if it's on a smaller time frame too.
Let me see if I can make this bigger. Okay, so
But
here,
the pullback to the consolidation would be better.
that's the trade we want. And that was basically all I'm wanting to. I saw this on Crude maybe on Thursday. And, you know, you can see we were going sideways, pretty obvious, even before we get to the breakout. And a lot of traders are seeing this breakout and they're trying to get long in here. And this is just another great example of, since we didn't get a bar that went lower than a previous bar and then continued higher, once I started seeing the selling up here, I'm highly motivated that it's not gonna break lower and keep going. It's actually gonna come back to test this area. And in this case, it just completely went to the other side. So just another quick example of when it breaks out, I really want to see that breakout pullback. Otherwise, I'm just assuming I'm gonna fade it. Whenever it starts to turn, I'm just gonna fade it back down. I don't get that breakout pullback. So that was just kind of a follow-up on some stuff, and then that plays in really well to what I was working on, which were runners. The newest tab is actually covering profit on runners. I think we've talked before about, you know, where do you exit your runner if you get a reversal at the high, if it crosses the EMA, you know, pretty much standard ideas. Here, I'm trying to take it to another level in that I want to cover major events. So I don't know I'm going to be right, and I don't know how right I'm going to be, but I'm going to let the market tell me, and I'm going to cover every key event along the way. So what that means is, in my strategy, I have an entry right here. This is a failed second entry short off this low, tried to lower once, tried to lower twice, boom. Once it breaks above, I'm in. So how would I manage this runner? When it goes up, cool, I probably got my scalp. Once we close above this previous high, which was a swing high from kind of all back in here, once we close above, boom, I want to cover that bar. So now, okay, worst case, I'll exit it at the highs of the previous swing. If the market wants to pull back there, hey, it's got to do what it's got to do. But I'm covering way more of that profit instead of leaving my stop loss break even +1.
So you would take profits even if it breaks above?
I would what?
I said, so you taking profit even if it breaks above the previous high?
I'm covering. So I would move my stop loss to that level. I won't exit. I don't have a buy order up here, or a sell order really. But all I have is a stop, and I'm just trailing the stop. And when the market decides to turn, I'll get stopped out. But I'll let it keep going as high as it wants to go. So then the next key point was a break above this swing high, which was the yesterday's or current swing. And so then once this bar closed above that previous swing, boom, I move my stop loss 1 tick below that bar that closed above, right? And I keep doing that. And in this particular situation, not long after, it reverses and you would have got stopped out. But let's compare that to the standard management, which would have been like, yo, if it closes below the EMA, I'm going to exit. On this particular trade, you get this big move and then get an exit way down here. And that's fine. You know, you still made some money. But of course, that messes with your psychology, right? Because it's like you feel that you have this winner in the bag, and then you give back 50% of it. and then now you're in a different state on these next trades. So this is a way of getting that feeling of like, I don't give it back. You know, sure, it might not always run, but if it does run, I have a method of not giving it back. And here's the funny thing about why I think this is kind of triggering, right? Because you enter here, you're going to do the basic EMA cross. You get your cross. If you're following your system, you know, you get your cross, you're out. I think in the very next slide, boom, the very next slide
Bounces off that.
It bounces off the EMA after going just below. And that was the issue I was having. I was like, okay, if I do the EMA cross, honestly, by the time it gets to the EMA, that's kind of where I need to be adding on, right? That's not where I should be exiting, but at the same time, it's so close to my original entry, I'm now going to take a loss on something if I give it too much, right?
Mm-hmm.
So yeah, that was just a way of kind of covering your profits a little early. And you can see the same sort of thing happens once again, where I would have had a re-entry there. We made a swing, so I cover the swing. We broke above the swing high, so I'm covering the swing high. We have some congestion and a lower high swing. I cover that swing, right? The market has not stopped me out yet because I'm not just covering, oh, green bars. I'm covering key events.
Covering the swing lows.
Exactly. And so
that
way,
anything. You call them swing lows, pivots, key events, trouble areas. Just cover them, yeah. Yeah,
so I'm not nervous when it starts to break lower because I'm already covered up to there. And I think something I haven't talked about yet is that I'm covering key events, but I have a trailing stop of the EMA always, right? So as this EMA is moving up, if prices come back to that EMA, I'm still out, right? But if I get stopped out in between covering this high and where we are here, you know, that's the EMA's job. Until I get another key event, which is like a swing, a pivot, boom, I'll cover that key event.
Let me ask a quick question. That trailing stop, is that built into the order, or you're doing that manually too, or what?
Yeah, I'm doing that manually. Yeah. Because I have a chart trader, so I can literally just move my order up the chart and it'll automatically fill when prices hit.
Oh, okay.
And then again, I had one more trail stop, and then up here at the highs, we finally get the swing lower, and then we finally get a close below the EMA. And in this situation, you know, you might have been happy closing below the EMA. I mean, that's a nice win for sure. So you wouldn't have cared that much, but you know, you can see how even if you follow this slightly more technical management strategy, your exit is 2 or 3 points better. So just finding creative ways to really just cover the distance. And then it was ironic because when I worked on it, they both worked really well. And I was like, you know, that's bullshit because not every trade works that well. So I wanted a trade that didn't work super well. And how would I then manage something like that? So the last one that I'll do is this one. This is the same sort of entry, higher low from here, cut the low once. I'm just buying off the EMA, looking for the test. So I'm in. Trail stop 1 is the swing low because even though on this bar we broke above, we didn't close above. I don't consider it real if we can't close above. I think it's just trying to fake people out. But I want to see it close above, so I'm still covering down here. But when we make the that failed break lower reversal bar, okay, I want to cover that, which is just a tick. You know, it's really nothing. But then now that this bar closed above this pivot, okay, I'm covering that bar. And pretty much it pulls back and you get stopped out. All it gives you. But had I waited for the EMA cross, so basically the way I did it is trail stop is where I'm covering. Exit is where the market would have stopped me out. So I had my first stop out here. My second stop out was the swing lower when it started closing below this lower high. And the third stop out was the EMA cross, which is the least profit. So it's the simplest to do, but you know, you can cover better by employing these small techniques along the way.
Yeah.
And that's what I got.
Excellent.
Yeah.
Excellent.
That's what I got.
I had the trailing stop. I had that exact same play. I'm not sure if I got it from. I'm not sure who I got it from. It's on my trailer though. But that's definitely not easy to do when you're in the trade.
Yeah, no,
it
it's
really
a lot.
It's really not.
It's a lot of work. Yeah.
It looks easy looking at it. Like, oh, okay, just follow the lows. Nah, you're in it, watching your profit go from here to here, here to here.